Imagine this, it took me less than a month to make a profit of $14,000. I started with just a few $100 and used 3 different strategies. Today I will share these 3 strategies with you and show real examples of what I did during the challenge. And at the end, there will be a bonus. You will learn how to improve these strategies to make even more profit. Ready? Let's go! Trading is filled with numerous myths that can clutter people's minds. Some are so frightening that a beginner trader might never get to practice, giving up on studying markets, charts, and technical analysis. This means these useless and harmful myths need to be debunked, and that's what we are going to do now. I've identified 2 myths that I consider complete nonsense and that shouldn't exist. The first is the belief that only professionals can engage in trading. I have a great scientific answer to this. In the early 80s, 2 well-known traders had a debate. One believed trading was only for educated and knowledgeable professionals, while the other argued that anyone from the street could trade. They decided to run an experiment. They placed an ad in the newspaper looking for people to teach trading. There were no requirements for those who responded. The group was quickly formed and everything went great. People who knew nothing about trading made around $100 million. The condition of the experiment was not to disclose it for 20 years. In 2007, a book about these events was published. It's called Way of Total. This book alone debunks the myth that trading is only for professionals. The second myth is that you need a lot of money to trade. Not everyone can afford to deposit $10,000 or even $5,000, but you don't need that much. My personal experience has shown that even the smallest deposit can grow significantly if you have patience and act cautiously. I often do challenges where I start with a few $100 and stop trading when I make a profit of $10,000 or more. This stereotype is easily shattered if you ignore the naysayers and try trading with a small amount. The key is to build a foundation of knowledge about trading, the market, and the tools. My Telegram channel is full of material for good start, strategies, signals, trades, and even personal consultations. Follow the link in the description. Now let's move on to the strategies I promised at the beginning. For the first strategy, I used the engulfing pattern or teaser. This is a combination of candles where the first candle goes in one direction and the next candle moves in the opposite direction. The second candle completely engulfs the first one, including the body and wicks. If you look at this pattern, the body and wicks of the first candle are contained within the second candle. This is considered an ideal engulfing pattern. Here's a perfect example on the chart. The candle has completely engulfed the previous one. When it closes, we get the signal to enter a buy trade. On the forex market, a risk ratio of 1 to 3 is set, and in binary options we set the time frame to 1 to 3 candles. The growth after this pattern is often impressive, but we still have 2 more strategies. Let's look at the next one. This one is based on signals from the moving average. I placed the indicator on the chart but changed the period settings to make it slower. We need an indicator with a period of 50. You can also change the color, thickness, and transparency for your convenience. The signals are as simple as settings up the chart. For example, we have an uptrend as seen here. This is evident even without the indicator, but when the price is above the moving average, it confirms the trend. Now look at how the chart bounces off the indicator in an uptrend. You can confidently open a buy trade on one of these bounces. It's simple, accessible, and suitable even for those who don't understand what's happening on the chart. Just like my next strategy. Although it's considered more serious, it's easy to understand. It's trading from levels. Let me show you visually. Here was a downtrend. Then the price started to change direction but seemed to bounce off something. When it bounces off almost the same price level, as in my example, it can be considered a level. In this case, it's a resistance level. The price also reverses a couple of times from almost the same price level below. You can draw it here. Remember, the main trend is still bearish. Therefore, all trades from the levels in this case will be sell trades, from the upper level also known as the resistance. Let's not delay, and while everything is fresh in your mind, I'll show you one trade for each strategy so you can see how it works in real trading. I'm launching my trading platform. Let's go! Right away, there is a sell signal on the chart for the first strategy, and I'm entering a sell trade. Remember the first strategy? Correct, it's the engulfing pattern, and here it's one on the chart. In this case, it's a bearish engulfing pattern, so the trade is the downward. If the first candle is bullish and the second one is bearish, it's a sell pattern. It's especially powerful when it follows a downtrend significantly, strengthening the sell signal. And here's the result, a profit added to the deposit. Time to profit from the second strategy, the moving average. Here we have a buy signal, and it's a strong one. The chart shows an upward trend, which is stable, confirmed by the moving average. And here's our signal, the price has started to bounce on the indicator. The upward trend with the indicator below the candles indicates that all trades should be buy trades. The price is already showing growth, and profit is almost guaranteed. The option closes in profit, and we move on to the next trade using the last strategy, trading from levels. The price is squeezed between two price levels and is currently at the lower level open a buy option. One reason is the upward trend that existed before the price corridor formed. The chart hit the same zone several times, and I decided that the price definitely wouldn't go down and entered a buy trade. I was right, the level worked perfectly. The price is forming large green candles, confirming that my analysis was correct. Even the last red candle couldn't hold the price down for long. It left only a wick. Eventually, the red candle turned green, indicating that sellers have no power against the trend. The third trade was also a win. That's enough practice for today. If you want to see more trades using this and other strategies, and even trade using signals yourself, be sure to join my Telegram channel. Can you turn $200 to $300 into several thousand using these strategies? My challenge showed that it's possible, but you can only do this by following all the rules of the trading plan. Risky trading feels especially intense with a small account. Speaking of mistakes, there is a standard set, and the first mistake is rushing. With a small account, you absolutely cannot rush unless you're trying to grow your deposit quickly. Rushing to open trades means you miss many details, ignore risks, and misinterpret signals. Additionally, when traders rush, we often make technical mistakes. For example, entering the wrong option amount, opening a trade in the wrong direction, or choosing the wrong asset. It's very foolish to trade a large part of your deposit with a small account and no experience. For example, you have $200 and you enter the market with $100. This is clearly due to the desire to earn faster and more. But what if the signal is inaccurate or a technical mistake occurs? Losing $100 would mean losing 50% of your deposit. This means you'll be twice as far from your goal of losing a large capital compared to before this trade. Open options with amounts no higher than 5% if you have $200. Each trade should cost $10. Yes, it takes longer to earn this way, but this method of capsule distribution is much safer and more reliable. I hope you liked the idea of growing a small account with these simple strategies. If so, be sure to like this video and subscribe. And now I'll tell you about one more very important thing. When someone starts learning trading, they study strategies, technical analysis, and trading concepts. But in 90% of cases, beginners overlook the psychology of trading, which for many becomes the main reason for failure. If you don't know what to do when fear, greed, excitement, or anger appear during a trade, consider yourself trapped. A trader trading with wildly fluctuating emotions is doomed to fail. The problem is that many don't know how to handle these situations. when feelings overwhelm them during chart analysis. I've tried many ways to control emotions: proper nutrition, yoga, positive thinking. And you know what effect that had? None. If an emotions go over the top, you can't do anything about it. However, there is one way: redirect it elsewhere. Don't fight the emotion. Channel it into something useful or vent it elsewhere, not in your trading account. Do you have a punching bag? Made it hurt. Got a bicycle lying around? Go for a fast-paced ride. 3 to 5 kilometers can work wonders on your emotions. You get the idea. Take on some energy-consuming activity instead of trading, and turn off your monitor during this time. I think I've said everything I wanted to. Now it's your turn to take the strategies. Test them on a demo account. Then try trading with the smallest amount, and don't forget all the tips I've given in this video. If you are a diligent student, you'll definitely succeed. Now I need to go prepare the next episode. See you!